What's up, everybody? Hopefully, y'all are having a fantastic day. This call will ultimately focus on and have three individual sections, but ultimately, the whole call will focus on geo and macroeconomics, my insights, and ultimately what the data suggest might happen in the future. This video, which you're about to listen to, will have three individual sections. The first one, which is approximately the first initial 10 minutes, will pretty much be just the introductions, focusing on just the concepts, tools, and methodologies, and clearing everything up. More or less talking about actually what I trade and how you indeed can learn it for free. The second part of this call will focus on my previous predictions, so we can correlate this call to the other videos I've done, and so you can pretty much understand where we're at currently. And ultimately, in the section 3, we'll go into the future predictions and ultimately go into what I think will happen, in the future. Throughout this video, there's multiple things I actually want you to take note of. Most notably, how I conduct my research in geo and macroeconomics and the concepts and individual tools I use, but also how I apply it, because remember, macroeconomics can be read in multiple different ways, but I have developed my own way of reading these current situations in both a qualitative and confirmative quantitative way of doing it. Second part of this video will nevertheless focus on where my current predictions have been wrong, the shortcomings of them, but also nevertheless what I've gotten potentially right and where ultimately we're heading next, which is of course the third section of this call, which is the future projections of Nasdaq and dollar strength, and of course forecasting what will happen to the overall world economy, but focusing in on specifically the US economy. Now, I've gotten a lot of different questions of different individuals asking me how my edge looks like, right? Because there's some misconception that, I just trade purely based on macroeconomics, and that's not really the case, okay? Rather, I simply focus on a few different things, okay? So, my whole model, I'm trying to be as mechanical as possible. Now, of course, that does not work with the most qualitative things, right? And so I've devised more or less a simple little step-by-step process, which of course is my edge, and that's what your edge should look like as well. So I start with doing a qualitative macro analysis, then essentially I follow through and do a qualitative regime, more or less to find technical trends in different assets. After that, I more or less do a quantitative model to more or less disqualify any confirmation bias, meaning I need to confirm both my regimes and my qualitative macro analysis through quantitative things, meaning numbers, scores, averages, to see if I'm, more or less biased in any given way of my qualitative and any of my other analysis I'm doing, technical, that said. Then overall, what I'm doing is that I'm categorizing different trends. I'm trying to find historical analogies, etc., and cyclical, priors. Then essentially, after I've found the given desired trends in the given desired assets, I go through with a mechanical execution model. All right. Now, this is also how I invest. This is how I pretty much swing trade, and this is how I short-term scalp and intraday trade. Okay, I don't really scalp, but if I was to scalp, I would do it very similarly, since this is pretty much how I work on higher time frames, intermediate time frames, and lower time frames. I've also gotten a lot more questions about pretty much what you should watch in terms of YouTube videos. All right, how do I go about watching all of your YouTube videos? Well, personally, I would go watch my basic methodology. This includes every single little thing from how I look at technical analysis to how I do my macroeconomic analysis. Then, of course, the most important part of this, nevertheless, which is how I came to be this good at, for example, doing these different analyses and, understanding the markets, is data, all right? Data collection and all of that. Now, soon enough, all right? And this is also something I'm going to show you. I'll have a much better data collector, which is overall even more quantitative, but you can, of course, you can make it more qualitative yourself as well. Now, after you have done all of those things, I would just recommend you following through and watching the rest of my videos. So then watch this video, watch this video, watch this video, and watch the rest of the videos drop in. Okay? There's not gonna be any more playlists. The playlists is done. You have everything I use, which is in here. You have the data, which is pretty much all the different ways I collect data. And you have my understanding of the macro. You don't have everything, but this is more than enough for you to in fact start doing the thing I'm doing. Now I'm just showing you guys my research, and how I'm pretty much applying that towards the markets. That's literally what I'm doing. So it's just educational. Okay? Now, for example, complexity theory and all of that, it's very good to watch as well, since this pretty much is how I developed all of these concepts. In that video, I even go through and talk about how I designed all my concepts around the complexity theory. Now you gotta understand that essentially, if you go in and watch the other YouTube videos, the latest, for example, the 2026 predictions, I had a lot of things which I went through in that given video. Now, during that video, you'll hear me mention about this supposed recession risk, which essentially would maybe, alright, potentially cause this downturn in stock indice markets, and potentially also cause, a risk of higher DXY if you go in and watch that. My predictions has not changed. What has changed is that I've moved up the timeline. Remember, I'm watching this mega cycle come through. I've not changed my mind, okay? The videos is correlational. If you watch the latest YouTube video, it will be correlated to what I'm gonna say in this YouTube video. I'm not changing my predictions. I'm changing them ever so slightly, since the data, the macro, changes ever so slightly, which is of course what I'm mainly focused on. Now, during that specific video, 2026, I'm gonna link it up there, I talked about potential for recession risks, and potential AI boom risk and whatever, right? Now we've gotten those fears. We have gotten the recession fear, and it has already started now. This is the dip we have seen. I was pretty much expecting this recession / growth scare to come 2026. Now I expect, and I think this have pretty much happened, hence why I've moved up the timeline. Now you can see I was more or less here. This was in the bottom, so you understand this was in the bottom, but I just needed to clear some things up because I predicted this move pretty much in October, right? I talked about this potential growth scare, which of course was just people fearing this inverse yield curve and all of that. Plus, of course, that we see in higher unemployment rate and lower job creation rates through non-farm employments and all of that. Okay, now we have started seeing that, and now we have seen that, and I think it's over, which is why I needed to make this YouTube video, because I needed to clear some things up. Now you can see we've seen those things. Now I expected us to go down to this fourth or third standard deviation here. Now I'm not going to explain. I've explained how I created all my given concepts if you watched the prior video, but in here I just pretty much expected an upturn. Okay, since I expected us to had fulfilled our objectives in accordance to my entry model. So this was my technical analysis. Similarly, all of this is also important to read prior to you watching this video, and that's just because these are some of the things I predicted. This was of course yesterday, prior to many other things we're going to talk about today came out. I was just more or less expecting a high being in for the dollar, as you can see at these 100. I've talked about that 100.00 being more or less the most probable level for seeing a reversal, since then the equilibrium which has built up under this will more or less be that attractive for the markets to reach, since it's very improbable for the market to stay at these high level for longer. Remember, we are watching a deterioration in macroeconomic data. Most notably, we're looking at both Fed mandates supporting rate cuts, which in historical analogies means that the dollar 60% of the time at least has gone down 4 or 5%, you know, in the past 3 months. So you can read all of this. I'm just pretty much going to read it out loud. So as I said, fundamentals, flow and sentiment has fully changed towards the DXY. All throughout this period of darkness during the government shutdown, we have been seeing both Fed mandates moving in favor of rate cuts. Now, I'm going to pretty much show you some of this, not all of this. Ultimately, none of the rate cuts has been priced in. Remember, the rate probability cut odds, if you actually looked into them, was in favor of not seeing a rate cut. Now it has changed today, and it will change, because we're not only looking at, as I said here, the rate cuts in December. Rather, we're looking at, you know, other rate cuts. We're looking at the whole picture, the rate, you know, cycle of a cutting cycle, right? That's what we're looking at. And I've been seeing inflation coming down. I've been seeing a labor cooling with non-farm payroll adjustments, which is what we're going to mention, you know, next. Higher employment, new Fed share, share coming through. And what I want you guys to study, if you want, you know, to learn how to break things down, I'll actually have a homework for you guys. And so what I would like you to break down is simply going over how the new, you know, board will look like 2026, because that's not what institutions is looking for. You gotta always be a step ahead of the markets, or nevertheless 2 steps ahead of the market. You gotta know why moves is getting created through information, right? And so, you know, we believe there is, you know, information traveling through the markets, since it's not only information, it's the implication that information has on the macroeconomic space. So that's overall what we're looking at. So as I said, we're pretty much, Trump has already appointed 3 governors: Michelle Brown, Stephen Myron, and Christopher Waller. I would also like you pretty much to study all of them. Some of the projections I've had, alright, before we cover the sort of new things pretty much I'm looking for happening in the markets, like usually gets revised like crazy, which is of course why we mentioned that that's not what the Fed is going to look at. They're not going to look at the non-farm payroll, because we're going to get this massive revision. So even if it's like plus 200k jobs, you know, higher than 50k, because we got the, remember we got like 150,000 jobs higher than the 50k forecasted, meaning we got like 150k of a difference in positive. Now that got revised down. So now the actual ADP unemployment right now is sitting at minus 13.5k. Okay, so see, this is why the Fed do not look at non-farm payroll. They don't look at non-farm payroll because it sucks. Okay, rather they look at unemployment, and they look at unemployment rate. Remember this when we talk about it. Remember all of this. This is crazy freaking important. Now people said, oh, it's a silver twist on the gig economy. Well, they're stupid. They're stupid. Because look, we knew that we're gonna have a lot of freaking, like a lot of job cuts. We know that it came from the private sector and the public sector. How did we know this? Well, because of freaking public news, and we have our brains to think with, right? We're not stupid enough to actually look at the non-farm payroll. Rather, as soon as the non-farm payroll came out, we literally looked into, well, is this really the case? No. And so of course the Fed is not going to use this, but now we got it revised down. So now we actually lost 13.5k jobs in the whole, you know, economy in the US. So that's crazy to think about, right? As I said, see, this is why we're thinking a little bit differently than everybody else. And this is why the market, of course, you can see Euro is dumping, or the DXY is dumping, and Euro is pumping right now. That's just because of this thing happening currently right now. And as we can see, Nasdaq is actually taking that pretty negatively. Like, we had a little bit of problems figuring out how Nasdaq would, you know, remember, like, we did not really know how it would react towards these revisions. I did not really know they were going to come out today, but it reacted negatively, remember, because this just forecast recessions, right? This forecast unemployment going higher and potential recession. So now we're seeing some recession fears on Nasdaq. But nevertheless, I don't think later in the market that's going to be, you know, what's going to happen. We also see this because Google and Microsoft is gaining, while because of like ship sale differences, which also came out like 3 minutes ago, something like that. So everything happened at once now. And now we see yield spreads going crazy due to these news. So yield spreads is dumping like crazy, which is of course reflecting why the dollar's dumping also as what gets crazy. See rate cut probability odds jumping. So now we're seeing rate cuts. Plus we got the major inflows. So we can see we got like 7 or 8 things happening simultaneously, which is changing like how we look at everything. Okay. Plus we got the PPI as well. So we got the PPI as well, guys. So man, everything is happening at once here. So I just needed to do this call with you guys. So first of all, let's just move ourselves over towards the major things, the macro, and then we're going to cover the flows. So we're going to break it down from first, second, and third because we got changes in all of them. But okay, so we started with first, and so we can see that we actually got the PPI. And as forecasted previously, as I've said to you guys, remember, previously what I've talked about. Now we're looking for inflation to come down, so we're looking for a producer price index to go down as well. Now we've seen that, coming down. Rest of them came out as forecasted, a little bit higher than previously, but it's just like 0.2% higher, which we'll see right here. So you can see previous ones was 2.7, and now we're seeing 2.72. So it's just a little bit higher, which is very great because we're forecasting CPI releasing at like 2.72. Okay, that's our forecast for the CPI, the consumer price index, dropping after actually the Fed's decision and the rate cuts. Retail sales is going down. This is pretty dramatic as well, not gonna lie. Just simply means that not so many people are focusing in on the weakened consumer. So we're seeing very weak consumer here. So we just overall got a lot of bearish news simultaneously, which I said would happen when the government reopened. Like we're gonna get this bam, 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 and we're gonna just continue having this negative information from dollar strength perspective. So we're not gonna see dollar strength, rather we're gonna see dollar weakness. So we're gonna get this bam, 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 as we talked about. Now, just going to previously, I'm just going to remind y'all of the non-farm payroll. Remember this? Got this 200k, like, wow, oh my gosh, we're getting like this 150k more jobs than expected, as I began talking about in the beginning of this call. So please bring out your notepads because this is going to go annotated. You should do another in-depth analysis right now, actually, today, right now, like prior to the market open if you got the chance. I'm going to try to go through everything with you guys, but got a lot of things that, went crazy. Okay, and of course it went crazy in accordance to our analysis. So this is not crazy, this is not unexpected. This is very expected from our perspective, but it's very unexpected from the market's perspective because remember, it has not priced in any of the things we've talked about at all, and now it's gonna get priced in like crazy fast, which means we're gonna get crazy moves, which means that we're gonna take a swing tomorrow on euro as well. Gonna see good price action. We're gonna get everything back. So you guys see we got this 150k upwards of the non-farm payroll. We said last Thursday when we had a call, we're not going to use this because it's going to be revised down like crazy. And look, now it's negative 23. So now it's negative 23. So it went from positive 200k to negative 23k. That's crazy of a difference. And now, due to that, you can see the odds just jumped like crazy. Remember, it was like 60% not cut. Now it's 84% they're going to cut. See, this is crazy, guys. So see, there's a lot of things happening in the markets, and now all of these institutions is changing their minds because you have stupid institutions on one side and smart institutions on another. Same thing goes for retail, but now the markets is changing a little bit. Retailers is always so late with changing their minds. They're the latest ones to change their minds. What you gotta think out, right? You gotta be the ones knowing all of these things happening, but then you're not acting on it. We cannot act on these news prior to them actually being priced in a little bit. Simply because, well, if they're not going to get a little bit priced in by some institutions, we cannot trade and move because then we're going to get stopped out. Okay? Yeah, see, AMC, bro. Oh my gosh, we got this right now, bro. We got this change right now in probabilities. We just talked about it. So you missed the major important part. Yeah, so that's literally what happened. Let's just look at the PPI. No worries, AMC, no worry. But this is why, we got to talk about all of these things. So, ultimately here, we got another PPI report, as you can see. And we know that PPI is a 2-month lead on CPI. Go in and look at macro, micro. It's a very good site for this. I can design this as well, if you guys would like to. Nevertheless, you can see, ultimately, this leads us to believe that, inflation should have gone down. And remember what we have previously said due to all of these things. So we're pretty much going to just check them out. So as you can see right here, You can see dollar is of course dumping because now everything is getting priced in at once. So you're not gonna get piled into this. You're not gonna just, if you were a retail trader, you would just take longs here on euro. But what we're gonna do is just wait for a swing trade entry tomorrow, and then just very good STA tomorrow as well. Since today we got this, spooling downwardsness. You could have easily taken a trade. We had a very, if you went into the in-depth analysis, we were already forecasting these things because we were already looking at yield spreads. We were already looking at all of these things. So if you went into the in-depth analysis, you would see today I was looking at a very bearish bias on the DXY, and I'm just going to send this to you guys. From a yield curve pretty much has started melting, right, and the dollar had not pretty much started pricing in all of these things yet. Now it is currently doing that, but listen, it's a very, very small part of what's already going to price in, because remember, they're not pricing in the continued rate cuts, and that's essentially what we're going to talk about later today as well. So please note this down, okay? Recall later today 20:00 UTC plus 2, UTC plus 1 now actually, is going to be extremely important for a long-term narrative, since we're going to talk about the Fed's makeup and how the Fed makeup is going to change eventually. So we're going to talk about how the Fed's makeup is looking like today, because we need to understand the 12 board members. Okay, so we're going to talk about the 12 board members today, which is something I've not really done, which I think is very, very good to talk about, since it's a very important part of the macroeconomic things, right? So we're going to talk about the Fed board makeup right now, and then we're going to talk about how that will change in a year. Okay, so how will the makeup change in accordance to what's already more or less people think will change, like eventually into accordance to probabilities, right? So we're going to talk about the new Fed chair, which is potentially going to come in later, who that person might be, because we don't really know these things. And we're going to be very forward looking, so you got to understand, because what our perspective has been is that interest rate is going to go to near zero in the near future, right? So that's what we gotta look at. Is that really the case? Because what determines if those is gonna go to the near zero rates is, of course, the individual Fed board members. So we need to understand who they are, right, and what will change, and what has made me take the dramatic prediction of seeing near zero interest rate levels, like of us seeing near zero interest rate levels. So we're gonna talk about all of that. Nevertheless, you can see right here, DXY is dumping, but what's more important here is what the yield spreads is doing. So you can see yield spreads is dumping to new lows. As you can see, it's dumping to new lows right now. See, it's crazy. This is the front end curve, as we talked about, and this is of course the 10. So you can see it's dumping to new lows, which is ultimately, I would say, when we're gonna start dumping for the DXY, because when this yield spread starts moving, that's when the dollar starts moving, as you can see today as well. And this will just continue, because nevertheless, you can see we have quite far to go, like, yeah, quite far to go. We can go down all the way here, potentially all the way here, which would be like a dramatic shift, right? Which is why we're looking at the US yields going down much faster than the rest of the countries, right? The rest of the European countries and all of that. And that's just because we're looking at a very aggressive GDP growth this year in the US compared to the rest of the world. Plus, we're not seeing that government, crazy government spending in the US as we used to see. But all of this is just other factors. But we might talk a lot of other things. But I'm just gonna cover all of this right now, so we don't need to do this later. Okay, so we don't need to cover all of this, later, because otherwise it would be just such a long call later today. Now, what is happening is that all of these institutions is pretty much piling in, and you can see we saw this. Remember, we were waiting for this massive inflow here. We were waiting for this massive inflow, and so we got that massive inflow here, which more or less also made this 20-day net rolling day position low, which is ultimately why we're looking for higher Nasdaq today, since institutions just continuing piling in here. So we're not seeing any crazy. Overall, I'm very bullish on Nasdaq. So now, remember the level we annotated this morning. This is the level I'm looking at. I was looking at something like this happening, in fact. So if you go into the in-depth analysis here again, so I'm just going to send it to you guys, you'll be able to see that I was looking at something like this happening today. So now we're just looking at a sweep coming through here. So I was not sweep here. So I was looking at a sweep coming through, and then also go into this like level down here. So that's essentially what I'm looking for right now. I'm just waiting for the sweep of this and an STA towards the upside. Now we're actually see market open, so we're looking at something like this. Now, why Nasdaq is down is of mixed overall feelings, okay? Is of mixed things happening, okay? So ultimately, right, what's overall started this rally is more or less that this rally right here was that, you know, some companies was reporting earnings, and we saw massive, pretty much, you know, higher prices in companies such as Google, because Google is even though it's an AI spender, is not really considered an AI stock, which I think it should be. But now, you know, they created some things and etc. etc. And so the stock went crazy, okay, over the past couple of days. So it pretty much went up like 30% or something like that, and it has continued. It was up like 5% pre-market here or something like that. So it's just continuing up. It's like a safe bet against AI, because essentially they're doing a lot of other things. They're, you know, the owner of search and all of that, or the leader in search, I'm sorry. And right now they're in a deal with Microsoft. Like they're entering a deal with Microsoft, and then they're essentially bypassing Nvidia. So they're bypassing Nvidia because they're Google now announced a chip partnership with Microsoft rather than Nvidia, for them to buy their TPUs rather than CPUs. You have CPUs and then you have TPUs. TPUs is much better for AI. So Nvidia is crashing right now, which is leading to this downturn. But I think all this is going to just get resolved with some news today. It's going to be pretty simple. Oracle, I'm buying in some Oracle today, even more. So I've started buying in here. I'm down like, I would say 10%, right? I think 9% or 8% or 10%, I think, something like that. But I've been buying this whole dip here, so I'm going to continue buying today. But I think it could go as low as 168. We have a very good like technical level here. I would say this is like a monthly level, this right here. And you know, usually you can see this month we've dumped like how many? 27. That's crazy. And so I think all this, of course, is just a fundamental imbalance, and I think we're pretty much gonna, you know, reach upwards. So I think it just looks very good, not gonna lie. So I'm just gonna keep buying in here. And then one more. Yeah, you can see that's essentially what has happened today. So we have just a little bit of more uncertainty. I don't think that's, you know, crazy. Like, why should the market dump when they're just, you know, doing some deals here and there? Like, yeah, I don't see any massive problems. I don't see any massive problems. What people see right now is that Nvidia, like what people, retailers right now are talking about, is that Nvidia can collapse. So if you want to know the retail narrative, they think that Nvidia, you know, is not gonna sell their chips anymore. It's panic right now. So all the retailers are currently panic selling Nvidia here, due to them thinking that Nvidia is not gonna be this leading company, because now people will buy TPUs instead of CPUs. I don't really see that problem at all. So I think people are very, like, the stock market is just a whole nother game than FX and all out of that, because it's just a lot more feelings. It's just a lot more emotions, and you can just simply see through all of that. It's very easy to see through all of that. So that's essentially all we're looking for happening here. Very good trades coming up, like later, for both Nasdaq, which I think is, you know, highly likely to see, for us to see like an buying opportunity here in just a couple of like literal minutes or hours here. And then I think it's a very good opportunity, you know, on euro here, because we're looking at the DXY potentially going up here, and then we're looking at pretty much a sell. So we're looking at like an STA forming here, where consolidation, sweep of that, and then downwards. Okay, that's super simple. That's what we're looking at. So that's literally it. Any questions? Any further questions? Or is it good? I just needed to do this call for you guys, because, you know, it's a lot of things going on at once. And so rather than me going through it 20:00, I will just want to go through it right now. So it's just a lot of things. Hopefully I've annotated a lot of things, like gotten a lot of good information. Please do another in-depth analysis today. In fact, you know, that would be good. We will, yeah, look, we might see the trade right now. We will see. just keep your eyes on Nasdaq, keep your eyes on dollar strength, and keep your eyes on euro and GBP and whatever. Okay, keep your eyes on all of this. Keep your eyes on STAs, and I think the STA will come tomorrow, I guess, not today. But nevertheless, just keep your eyes on all of this. Keep your eyes on all the information. Thank you all so much, and I'll see y'all later.